Hey everyone, welcome to the daily news. Wow, woke up to some pretty headline numbers today. You've probably seen them as well. We had a Blockbuster jobs report number, easily exceeded expectations. Um, we had the GM strike workers coming back, the second and third derivatives of that coming back, and just a bang up number, 266,000 folks, went to work. A couple of things that were interesting in the report is kind of where the jobs are. Still leading the way is education and health, which makes total sense. But next was manufacturing. And that's an interesting number to watch. I think some of that data is a little dirty because of the GM strike and the impact of not only GM coming back, but the second and third derivatives of suppliers of GM. So that number I'm going to watch. It reported in January for December because that surprised me, right? And frankly, it was a positive surprise because if we can really get the US economy making things again, even slowly, not only 2020 will be good, which I'm already calling, right? No recession in 2020. But if we can put back to back to back manufacturing job growth down, man, we could be good for 2 or 3 years easily. Um, so that was a really, really good number. The other thing that that job number means to me, and yeah, you can just look at the chessboard and see it, is we are going to be taking a much, much stronger stance in the trade war negotiations. Because if you look at the data, at least as it's reported, right? I can only believe the data that I read, and you can argue about how good the data is or not. But the Chinese, I don't know, population, right? The average person is really suffering because of food prices are up. Soybeans, pork, they had this unfortunate disease. I think swine flu is what it was called or something that took out a large swath of their pork industry, which was unfortunate, both for the pigs and the people. Uh, but I can only imagine the stance that we are going to be taking in these negotiations because while the Chinese economy hasn't reported really a solid number in 9 months, and we've been in this for 15 months, so you can see the ripple effect. Our economy seems to have regained its footing, thanks to the Fed rate cuts, thanks to just the nature of capitalism, where people want to take cash that's not earning anything in the bank and put it to work, right? Whether that's investing in new manufacturing, whether that's buying companies, whether that's buying assets, right? That's happening, and you can just see it over and over as reported on this channel. The other thing I think that's very likely because of this strong jobs number is the Fed is done cutting. Right? I've said it before, but I think I've only said it once. I don't see the Fed cutting or raising next year. Gun to head, if you will. I think the next move is up, not down. But again, I don't think that's in 2020. So for a real estate investor like myself, that's good. That means cost of capital should be relatively smooth, although I do expect rates to tick up ever so slightly, just because of the instincts and the ability, um, the whole greed versus scared mentality. I think we're going to be leaning towards greed, if you will. But you got to pay attention to lenders, right? I recorded a video yesterday about a California lender who has every right, and I've used to change their requirements. Lots of people were using it for BRRRR, buy, repair, rent, refi, repeat. If you haven't seen that, go back and watch that video. You just got to stay close to your lender because they can change. They're the one lending money, so they can change. So I do expect more adjustments in lending in 2020. Some positive surprises, some negative. It's all good. So I think again, 2020 is going to be a good, if not great, year in my opinion. There's probably going to be a little bit of noise at the end of the year with the election, which is probably to be expected by everyone. But it will be interesting. I think a good year in 2020. Here's a question for you. So we've talked about it, I think, the last 4 days. The December 15th tariffs kind of on the books. I think it's about 140, 146 billion dollars in goods that we're going to put tariffs on. What do you think? Do we go for it and just say, hey, we couldn't get an agreement, let's go? This is all obviously assuming a deal's not done before there. Because if a deal gets done before there, there's no way those tariffs go into effect. But let's assume people play hardball at the negotiation table and someone says, hey, let's negotiate in good faith. Let's try to get something done by the new year, blah, blah, blah. Do we go into effect or not? What do you think? My stance is raise them, right? They're on the books. You've got to show a backbone. We frankly have talked about this for 2 months now. This was supposed to be signed a month or 5 weeks ago in Chile, if you remember. And while I expect a lot of negotiations to be going on behind the scenes, something's not done. So I don't think you can pull them off the table. We are frankly sitting in a much stronger position, again, based on the data we're reading. And we're the one with the pen out of the grenade. I think you've got to let it explode if a deal is not done, if you will. So what do you think? Do you take it off? Do you move it around? Do you take December 15th and make it January 15th? These are all possibilities. So it will be interesting. The other thing you got to remember about 2020 is we could have tax cut 2.0. I think I talked about that a week or two ago. There is still talk going on around the middle class tax cut, basically reducing tax levels. I think it was 29 to 21 or something like that. In the end, anytime a politician talks about middle class tax cut, it's more money in your pocket. So that will be interesting. And I fully expect a full trade war resolution to be complete probably right around the election cycle, right? I don't think anybody's confused that it would be good heading into an election to have this put behind us. So I think that is out there. Next up, I don't know if you saw this, but we had a record IPO. Hey, Troy. Let's see what really. Yeah, exactly. Raise it and see what happens. Too much talking. Let's really shake things up. Totally agree, Troy. Thanks for letting me know your thoughts. Then there was the biggest IPO. I don't know if you saw this. Saudi Aramco, basically their monopoly oil and gas producer. $1.7 trillion valuation. Kind of crazy. The thing that struck me of this is I couldn't own that, right? My bias is Saudi Arabia is not necessarily the biggest fan of the U.S., so I wouldn't be giving them a nickel. But it is a large monopoly, and generally monopolies are profitable. So you wouldn't catch me going there. But then again, that's not really fair because I wouldn't touch a stock of any company. So, anyways. And then next up, looks like OPEC is threatening to make cuts, given oil and gas have been not as lucrative for them. So it's going to be interesting to see what happens heading into the year. We the U.S. have been net producers for a while now, which is interesting because of shale and all of that. So it's going to be interesting stuff to watch. Again, blockbuster jobs number. As I've said for a couple of weeks now, no recession next year. In fact, if we get tax cut 2.0 and a true resolution to trade war, man, 2020 could go down in the history books is one of those good years. So again, let me know what you think about the tariffs on December 15th. Keep them, raise them, delay them. What do you want to do? I'd love to hear from you. Have a great day. Take care. Bye.